Welcome traders, this is Mike Hamilton from Trade the Easy Way with my usual midweek review. And important data this week is US retail sales today. We're looking for a bounce back in retail sales, and on Friday we're looking for improvement in European and US services. We are all service economies, so that is a good one to end the week on and potentially set us up for next week. Still waiting for President Biden's extra stimulus to go through, so all this uptick in January and February is without the extra stimulus, so hence the reason why the markets are currently still getting bought. Right, over to the markets. Shaky start to the US market. This is the Dow on the daily chart. So what we saw last week, we saw a pullback into, this was the Friday close, and on a couple of weeks back, and then last week we just came right back into that Friday support area, and that's exactly what we're doing so far this week. President's Day on Mondays, the US was only back for the full day yesterday, so only the second day of the week for the US. So all we're doing is, as we did last week, is pulling back into this Friday support area. I wouldn't, at the moment we're 31.5 at a dip into the open. I wouldn't be surprised to see some further dips before we get potentially the end of the week, before we start to climb up again. We are, they've been on a long run here, so we went sideways for a good half of last week. I'm seeing the same pattern so far this week, so that is a lower close there. But overall, I'm still looking for a push higher in the markets. Right, let's have a look at Europe. I think DAX is doing the same. So I've been monitoring this pink area here. So we came out the top of it a couple of times. It's resistance from the very beginning of the year, back in 2020, early 21. So at the moment, every time we pull back, we are getting nice wave patterns up. We pull back into the end of January and sped up in the first week of Feb. So at the moment, these are just pullbacks in this potential bear flag. However, we are coming out underneath this pink zone, so unless we pop back and hold above 14,000, we're 14,000 now, and we are here at 8:40 a.m. in the morning. So if we need to pop back really by end of today into tomorrow, if we can do that and pop out the top of that end of this week, then we could start to run for 14.2 up to 14.5. However, stay under here and we are in trouble. We are a little disconnected with the averages. That's the 50-day average. This is the 200. So a full pullback to 13,860, which is only 140 pips underneath here, would not be too unusual if we can reconnect and then start to pull up. That's typical with a bullish consolidation. If you get a lot of sideways action, you need a dip to get the buyers back in before this will pick up. So at this stage, I'm still bullish the markets, and the FTSE's had a huge burst up on Monday, following on from this pattern that I talked about a couple of weeks back. We were looking for this to break up here out of this little apex, which we've done. Huge move up on Monday. All we're doing is just moving sideways now, consolidating, and again a little dip. It's possible we may boomerang all the way back to that breakout area around about the 6,600, but normally I would expect nothing more than about 50% pullback in that bar before we start to edge up and get back to these January highs. Okay, moving on. The VIX, the volatility index, is staying under this pink zone, and so we've nudged into it. All the time we stay underneath its pink zone, then the bulls are potentially in command. If we spring up here, then watch out. Dollar index getting a push up. So since we've broken out of here, we appear to be potentially heading up. We attempted to get to this 91, 86, 92 level resistance. We didn't. We sold off. So if we come back into here and then subsequently roll over, that's extremely good for the markets. However, if we are holding the 50-day average, if we keep closing higher, then that could take the sting out of the pound and the euro and see that dip. In the meantime, if this turns out to be a lower high, and all we do is move into that resistance area formed from this bar here, that's our sell signal in this daily dollar index. If all we do is move into that area and then roll over, then expect new highs in the US markets. Right. Quick look at gold and silver because they're interesting markets, and at the moment I can see this just coming right back to 1750, right into this long-term trend line down here, at which point I think this is the year of inflation. The huge amount of stimulus, huge amount of cash that's sloshing around the market. I do see this as a year for gold, but we're not bottomed yet. We've got an interim support level here above 1760, 1770, but ideally we'd get closer, come under that 1750 and then turn around. Okay, so a couple of spots I'm looking for on gold, at which point I will be a buyer. In the meantime, I'm still investing in miners in anticipation of this metal and other metals pulling up. So you can see the strength in the dollar is taking the steam out of that one. Let's look at silver. Silver is a different kettle of fish. Gold is 95% correlated to inflation, 95% correlated to inflation, whereas silver is an industrial metal heavily used in solar panels and medical instruments. I'm looking for this to come back closer to 26, at which point I don't think this is going to happen. I think if we see some further strength in the dollar, we can pull back to this base here, this baseline, and then I think we can wind up. So again, I'm dipping into miners, but not getting into these metals yet. UK stocks, I've been buying dips. I'm talking to you about BT and buying dips in BT. So I traded it in a push towards 148. Started taking it off the table once we got up here. There's no follow through in the volume. There's a massive resistance area. Now the volume is coming back on these dips. I'm looking for this to at some stage in maybe this week, maybe next, pulling up into 135 and back to 150. Okay, we've got a little breakout pattern here. So I think any dips into 125 are to be bought with a stop under the 121. The other stock I've been buying into is Rolls-Royce. Let's look at this on a 4-hour chart, it'll be easier. You can see the gentle basing pattern we've had here in Rolls. So any pullback into 95, 90 is buyable. I'll be buying around here. Seeing the increase in volume and anticipating this to, I think this could really get going. I think we're going to see at least 120 in the coming weeks, potentially. But obviously a lot of resistance up here with this 200-day average. Sorry, this is the 50 underneath us, 200-day average. So we may see some profit taking up here and pullbacks into the 95 area. So don't chase the market. If you're not in this, I would sit tight and wait for that to pull back. Quick look at a couple of miners. This is Pan-African. So once we saw this push up here, I started buying 22 here. So I'm slightly underwater with this one. but we're still holding inside the pink zone. I've got my stop underneath 18, so I've got that much risk because this is a long-term buy for me, and I'm looking for a push out of 28 and towards 30 plus on this one. So that's my risk, but that's my potential reward. Okay, so taking a little bit of heat here. What I tend to do is I tend to go in half size, and then if when in half size here, it didn't close above here, so I'm still sitting in with a half size position. However, if we start closing up here, then I'll get a full size position, and so I'm managing my risk carefully. And for me, risk management is the epicenter of trading, the absolute epicenter of trading. So I'm scaling in and not getting heavy-handed. So American silver miner, buying dips in this one. This is HL Heckler. This is still buyable. If you get a chance to get $6, great. My stop is down here under $5.20. I'm looking for this to get back up to 8 and 10. UK miners, this is POG, still not doing it. So give this time. This is POG. We've got a habit of pushing up and winding right back here, which is normal. So we have seen some attempt to get up and failed, but we are potentially basing here, could easily come lower with gold still weak. So hang on, just keep an eye on POG. One more for you. This is sentiment, CEY in the UK. This has been in trouble. This has really been in trouble. Came off from 230 all the way down to £1, pulled up to 140. Now we're basing down here. This is potentially a nice reversal pattern. If we close above 115, then I think we can start to wind our way back up again. So with a stock like this, we've had a big, huge fall off. Go in light-footed. Don't go in with a full position just because it's a cheaper stock, £1.12. Don't fill your boots with it. Let's just scale in. If we close higher, scale in, and then start to take some off if we do push up there, that is. There's no saying we are going to push up there. If we close underneath this area here, particularly under £1, then we're coming lower. So I'm just basing this on, with a huge move up here last year. The gold is still weak, so just be careful with this one. So the miners are still not doing it at the moment, but overall the UK stocks are looking good value at the moment, and these are a few that I'm looking for. Alright, I hope that helps. Very much looking forward to round the clock trader tomorrow. I'm on at 10 o'clock. Make sure you take a look at the long list of great traders that are going to be presenting for you and make use of them. Send the link out, pass the word around, and let's have a good discussion tomorrow in the session from, I think it's 9 o'clock in the morning till 8 in the evening. Alright, hope to see you there. Thanks, bye.